Good morning. I hope everyone's weekend is off to a good start. I'm going to talk a little bit about Friday's trade, the thinking behind it, the preamble and the execution. So I talk in the course about how you have to have a systematic approach to trading FX. You can be the best technical analyst in the world, but if you just approach the market with the aim of making money as quickly as possible, the likely outcome is going to be the opposite. So based on feedback, I'm only going to be talking about trades within this framework that I teach. So I genuinely believe using order flow in lockstep with price action and key level analysis, you can get on average about 2 to 4 solid opportunities a day, sometimes more, sometimes less. I'm talking mainly about A-grade trades, the main swings of the day. This gives you the best RR and the best edge in the market. So I have 3 main setups that I describe in the course. So in this video, I'm going to talk about setup 3, which was a continuation trade short, and setup 1, confirmation 2, which is a key level trade with a shift in market structure as confirmation. In terms of my own personal trading, this was my first week trading a 300k MFF account with live funds. So I'm comfortable trading about 15 lots on my personal account, but the prop account gives me room to trade around like 30 to 50 lots, whilst maintaining a 0.5% risk per trade. So I knew there was going to be like a comfort issue, like getting used to higher lot sizes whilst maintaining the same edge. This is actually a lot more difficult than it sounds because your edge is dependent on your comfort level with the position size that you're trading. For example, if you're used to trading 1 lot and you become comfortable with trading this position size and then you suddenly jump to 5 lots, then it's likely you're going to lose your edge. You'll end up cutting both winners and losers short, and the net result is likely to be negative. So like testing the waters this week, I could tell trading 30 to 45 lots was going to be a bit outside my comfort zone. In my mind, I think I would have been happy with, say, like a 3 to 4% return this week, and I ended up with about a 2% return. But because I was trading with an abundance of caution and also making the trading psychology mistakes I just described, I'm fine with this. For me, it's just a matter of practice and exposure to larger position sizes. So if it held to my planned TPs, then my returns would have been much higher. But this is like, you know, woulda, shoulda, coulda territory, so I'm not going to get into that. So this is going to be something that's personal to you. There's no way I can teach someone how to get comfortable trading a certain position size. It's kind of up to you and what you're happy with. So there are strategies you can deploy to help speed up this process, but we can maybe delve into that in another video. So we'll start with just the morning analysis and what we're looking at. So DXY range tightening, I'm assuming it's going to break out today. It's in a downward trend in the hourly. There was this gap to be aware of that I thought would probably be filled today being Friday. Same with GU, I'd like to see some kind of fake out. I'm moderately biased towards buy, but let's see what the charts say as they unwind. Be aware of the main zones of the chart. So the main zones here, this supply, this demand. So those are your main trading levels to be aware of. Current key levels. Dixie gap here. And then at 7 o'clock I was talking about waiting for the main buy below, at least below yesterday's New York low. So 6 a.m. we're getting to the charts. We've got all our key levels marked out. Asia low, Asia high, yesterday's New York high, yesterday's high, yesterday's low, and yesterday's New York low. So I was thinking, we're getting to the charts at 6 a.m. Our target is to buy in this kind of general area. So around here. Okay, at least at daily S1, because for pivot traders, daily pivot to either daily S1 or daily R1 is a classic trade. So I was aware it could reverse here, but the main trading level was this H1 and H4 demand below yesterday's low. So have to be very aware that it could come below here. So if you have key levels that are close to each other, the question is like, well, which one do you trade? Do you trade below Asia low, below yesterday's New York low? And the answer is generally you want to pick the one that's furthest away. And the only trading levels we have, what I call trading levels anyway, is this demand level below yesterday's low. So that's the ideal for looking for a long. But we also have daily S1, which I consider a kind of borderline trading level below yesterday's New York low. So I was looking around there also. So we'll press play and see how it plays out. And because we are going to be trading down here, or at least I project that, it's also okay, I think, to look for a short. And we end up doing that, but we'll get into that in a minute. DXY at 6 a.m. we're around here. We're just breaking the Asia high. I projected that it would go above yesterday's high, break that into this M15 supply, come down, fill this gap. So that's why I was looking for a long on GU. And we're talking all week also about Dixie coming down to test this H4 demand, which it eventually did on Friday. So back to GU. So at this point at 6 a.m. we're just breaking this trend line, so that's liquidity. Below Asia low is liquidity, and below all of these key levels is liquidity. So in fact, I'm just showing M5 to give an overview, so we'll go into M1 just for a more granular view. And here already is the continuation short we're looking for. So I call this setup 3. Okay, you're going with the trend, we're making lower lows, lower highs, and we have this big bear candle with an imbalance. So I'll show you this here. That's that bear candle with a 16-0 imbalance with high volume. And I talk about in setup 3, there's 3 confirmations, and you want at least 2, or just 1 if you're aggressive. But the 3 confirmations are a low volume retest of the level here, or some kind of lineup underneath this level, like a failure to break for a few minutes. So you get that around here. So that's the first one you could take. And better would have been here. So in my mind, my memory, I traded it here. The terminal says otherwise. Apparently I got in at 919, so I think I got in here, which was way too aggressive because that was high volume. So I think that was a bit of FOMO, but is what it is. That's where I traded. Here I think is the minimum you could trade because it's low volume retest. Better here, okay? So back at the charts. We'll just let this play out a little bit. That's the low volume retest. So that's where you can trade it. The only issue is like the RR isn't going to be amazing in this trade. So let's say a safe TP is daily S1, that's 16 pips, but if you have a tight stop just above 16.0, then you know it's still doable, right? So let's say short position, you don't even have to place your stop above the previous high, you can place it above this imbalance, so 2 or 3 pips, and you can target daily S1. I think me and Robbie ended up taking this trade. It wasn't the planned trade, but we're going with momentum. We're expecting to go down here. And sure enough, it pans out. I think I took profit around here or something. Okay, so that's setup 3. That's just a simple continuation trade using order flow. 16.0 imbalance, low volume retest, and then down to a safe TP. So daily S1 pivot, that would have been 7R, so not too bad. You could end your day there, 751 below, before even London Open if you wanted. But I kind of had grander plans for the day. What I really wanted was a good long down here. So I've got my eyes open and we're waiting. And already we have broken yesterday's New York low and just pierced yesterday's low. But we're not at a trading level, okay? Now, are you going to trade below Asia low? Not really, because there's no demand here. Okay, that's not demand. Okay, it doesn't break any structure. Really, what we're looking for is a good pierce below yesterday's low. I think I ended up getting involved early, kind of FOMO, taking a long here. But I had enough breathing space to get out at break even. So that was kind of like a stupid trade that I took, but is what it is. And now that's the real pierce that we're looking for. Okay, that's a good, like, you know, 7 pips below yesterday's low. So we've taken out a whole bunch of liquidity now, like the trend line, 3 key levels. So at this point you should be really focused on looking for the buy if it presents itself, but only with confirmation, obviously. So still not breaking that high or anything. And now here, this is where it gets interesting. So what are we getting? Failure to break this low. And this is accumulation, okay? So this is when it's kind of like game time and you should be really highly focused and zoomed in on the charts. You can see an M15, I call it sandwiching, so that's accumulation. To me, we're getting ready to buy here. And there we have a break of structure. So I say on the chat, the best I can say is like, okay, I think this is it. We're ready to go. Break a structure, wait for the retrace, and then go long. That's the best I can do on the chat, unfortunately. I can't say precise entries on text. I can't like type and trade and do that all at the same time. If you're on voice, it's fine. I can tell you when I'm entering, but at that point, you have to rely on your own knowledge of what I've taught. So, accumulation, break a structure, and at this point, I just use price action to get my entry. I didn't use order flow. It was too fast. I typed that on the chat, and at this point, I just pulled a fib from here to here, and I was looking for my entry within this discount zone. And pretty much take my entry now around here. So that was where I got it. I wasn't actually looking at the footprint at this time. I was just going on my own knowledge of price action. So taking her along, say it's around here. And you can place your stop below this fair value gap. That's all you need, three pips. And I said on the chat, the safest TP would be daily open. Okay. Daily open, weekly value area high. So we're in the trade, 30 lots. Now, my own personal trading, I talked about that. I ended up taking profit really quickly around here, which is a real shame because I was just looking at this Dixie gap which got filled at the same time, and I just thought that's enough for me. It was like, I don't know, 3-4 grand or something. So unfortunately, that's what I'm talking about, your edge being diminished when you increase your lot size, because if I'd been trading my personal account, I definitely would have held this. I'm delighted that a few people in the chat did actually hold this to the save TP. Now we had some kind of like dream TPs as well, above the 23rd of August high. You know, here I thought was possible, and there you've hit TP. That's 20-hour trade. That's enough. Daily open can sometimes completely reverse price action. Before you know it, your entire gain's wiped out. So for me, I wouldn't be holding beyond there. That's the 20-hour trade. That's more than enough. But if you're ultra aggressive, I think the next target would be the 23rd of August high, and even we were talking even about 119, and even the weekly pivot point, which, you know, there's no way you're gonna hold for that. But if you did want to hold for that aggressive target, it did eventually hit. I think one trader in our group did hold this far, Ruji, who's an excellent trader. Definitely watch out for her. So yeah, if you had the nerve, you could have held right up here, and that would have been, you know, insane, like 35-hour trade. So, you know, that should be plenty. So based on the analysis, that's what we kind of came up with. So any questions, DM me. My name's Jeff T on Discord and the Cable Traders on Instagram. Quite happy to answer any questions on this. And I hope you have a great weekend. And we'll talk soon. Okay, cheers.